Alrighty, traders. This is Blake Morrow. You are listening to the Morning Edge webinar. I was just looking at this. This is actually pretty shocking. I got to show you guys this. This is, I don't know how you guys, feel about COVID or whatever, but this is actually pretty shocking. Now this is obviously tweeted out of sarcasm, but it's still. You think about Florida and look at the number of deaths, whether they, cause the death as COVID or whatever, you guys can, I think when you look at like deaths, you got to go, okay, how many people died in 2020 versus 2019, right? As a whole. So you can kind of get a better idea of like, okay, well, where's the average? And was it more than average? If it was it, probably then it was COVID related. Mark it up as COVID or not. But the scary thing about this is post-vaccination. And that's the scariest thing that I'm seeing out of this. Not, take all the politics out of it or the, whatever, however you want to look at it. Just look at the number of deaths, now post-vaccination. And that's scary. Because look, if you're vaccinated, which I am, by the way, and I'm not saying this, you should be or shouldn't be. I'm not saying anything like that. I'm just saying I am vaccinated. But as a vaccinated person, that is a little alarming because you're like, okay, well, am I fully protected? And I don't think for a moment that I walk around with any, any type of half of my family are in the medical field. So I don't walk around with any ideas about, anything other than, hey, I took a vaccine and, hopefully it provides me some protection, but, I still have to take it upon myself to be, what do you call it? Sorry, it's so early in the morning. Just take my normal measures that I would normally take and, to protect myself and my family. But even by doing that, my kid got COVID, but anyway, needless to say, I think what I'm trying to point out is that even through vaccinations, Florida's seeing a rise in rates of deaths. And that's a little scary, just from a COVID point of view. And is it going to affect me or you? No, not personally, but could, something like that really affect the economy? Are we going back into lockdowns? I've been a long believer not thinking that we're ever going to go back into lockdowns. I really don't believe that we are. But are there measures that are going to be taken that actually prevent, normal functions? I don't know. I hope not. I hope not. Anyway, let's take a look at the markets. Let's say, just take a look at what we're dealing with here as far as currencies go. The euro dollar pressing previous support. Whoops, here we go. Previous support, current resistance. You notice that we hit a new high in the euro, but relative strength didn't. So that's a divergent relative strength move. That actually, I'm just going to tell you guys this right now. This move to highs in the euro dollar with it divergent. Well, I'll let you guys guess. You know what it made me do? I'm not even trading the euro US dollar. Take a guess. I added to my euro yen short as a result. I'm short euro yen from yesterday, up here in the 90s because of this channel resistance, right? And the 618 retracement, if you guys don't recall this from yesterday. And I added to my short this morning because it's holding the channel resistance. It's holding the 618 and the euro hit a new high on divergent relative strength. So, and I know the dollar yen is breaking lower. So I just added my euro yen as a result, and it had nothing to do with the euro dollar. Okay. But let's mark up this resistance here. So let's this is a 38% retracement, and it's still significant. I still think this 117.55 is key. I know we're here, and I'm going to say we're still bearish while we're below it. Remember, this is a 38% retracement, and when you have a 38% retracement, that is a higher probability of an AB equals CD move that takes us down something like this eventually. Okay, as long as we hold below that. So we might probe above it this morning, but I'm looking for more of a close. Fix that. There we go. I'm looking more to close to see where we close today. But I'm going to write down further resistance at the 50% retracement at 117.85. Just in case we squeeze up there. Okay. Support. Now we did come out of this. Now I drew it as a wedge, but you know, this could end up being just a channel too. That could end up being just like that, you know. But I would say that support is going to be down here today, and any dip down towards this horizontal trend line down here towards 117 going to be very well supported. Sterling. Now, if you look at the sterling, we are also, see this, we're also at the 38% retracement, and that is holding for right now. So let's mark up that resistance at 137.45. Now, I think that sterling is more in a range still. And remember, we're not like making lower lows here. So that's something to, you know, take note of. But I do believe that this 136 is going to be pretty good support on any dip. So, you know, we start making lower lows and lower highs, then, you know, we're making lower highs, but we start making lower lows, then, you know, I'm going to shift my tune with the sterling. Okay. Aussie, nice bounce. We yesterday, if you don't recall, yesterday we wrote down resistance at 72.40. Whoops. Okay. We are at 72, 48 right now. So further resistance. Now we have to stay bearish while we're below this dotted line. You can see it right here. Okay. It comes in at 72.85. It's 72.90 actually. So, but I think we'll get resistance before then. I just don't really want to ride it. I mean, yeah, I guess I will. 72.75, then 72.90. While we're below that, you have to stay bearish. Okay. We've had a nice recovery, obviously with, dollar weakness the last couple of days, but I would say, looking at that relative strength, I wouldn't want to be buying into that. It's a little overextended. May not be overbought. I just think it's a little overextended. But dips should be pretty well supported too. So, I mean, my guesstimate with the Aussie is gonna be we're gonna do something like this ahead of Jackson Hole, right? Like we have been doing. Downtrend, consolidate. Downtrend, consolidate, downtrend, consolidate, downtrend, consolidate. It's what happens. You don't go straight down. You don't go straight up either. So, anyway. Support today. So where is support going to be? I would say probably. Well, I mean, I'm guessing here on the on a triangle. We may not develop a triangle. But I do feel we're going to consolidate. I just don't know what it's going to look like. So let's go over to the hourly. Yeah, I mean, any dip down at today, and I'm just talking about today, intraday. Actually, more like right here. It's probably going to be pretty good support. So if we get any dip down here towards 71.50, should be very well supported. I'm not saying we're going to get down there. I'm just, just noting it just in case. I think it, what we're more likely to get is a dip down to is 71.80. So I'm going to write that. Okay, Kiwi. So this damn Kiwi squeezed the crap out of me overnight. I'm so pissed. Like what the hell kind of like headlines are that? Like the reason why we didn't raise rates is because it was a communication error. I mean, that was like last week. Like that just blows my mind. Communication error. What? Oh, did one of your Fed governors accidentally delete an email, and then or one of the other reserve board members said, "Oh, you didn't get my email? I wanted to raise rates." Oh, shoot! I deleted all my emails. I cleaned out my inbox. I didn't see that. Can you resend that, please? Oh, yeah. Oh, you were okay. You did want to raise rates. Well, I accidentally deleted that email. So let's go ahead a week later, put out a statement that we actually miscommunicated. But leave out the whole email thing because we don't want to look like a bunch of jackasses that just like accidentally deleted an email. Let's just tell them it was a communication error. I mean, come on. That a week later, what kind of BS is that? It's the most ridiculous thing I've ever seen ever from a central bank. That overnight statement. So this wherever the hell it's at. I don't know wherever it's at. That here, I guess we can go over here. Here's the chat room. Delayed rate hike on communication challenge. I mean, I deleted an email that suggested that everybody wanted to raise rates, and I screwed that one up. So, I mean, that's a week after the fact. What the hell is going on? Why would they do that? I mean, just so ridiculous. Anyway, stupid stuff like that really irritates me because that headline happened while I was sleeping. For why? Anyway, previous support, current resistance, 69.55. That's current level resistance. We're gonna have to take off the bearish designation. Also, we should note that 69.80 might be further resistance, so I'm going to write that too. I mean, that just fueled a nice short squeeze because you have people like myself that are like, well, I'm going to lean into it because the RBNZ didn't actually raise rates, so I'm going to lean into being short. So stupid. Anyway, support will be, I guess, 68.80. Probably dips down here, 68. 68.60. Any dip down there. All right. Talk about the dollar Canadian. The dollar Canadian's come off pretty aggressively. put in support at 69 or 126.20 yesterday. I didn't think it'd reach all the way down here. I know we wrote down that support. I just didn't think we'd get that all the way down here. But really, I think we should be looking at this now that we're here. This is support, which is also trend line support. It's going to come into play too. So I'm going to write 25.75. I don't know if we're going to get down here, but if we get down here, I'm actually going to go long, I think, down at these levels. Because I want to be buying dips, because I think overall, you know, you look at the structure of the dollar Canadian is we continue to make higher lows and higher highs. So I do want to be long. Okay. But it's finding the right location. And I think that's probably where it will be. Now, if we get some sort of recovery from here, let's just say the 618 holds, we get a bounce back. And, you know, if anybody's long from like the last, let's just say picked it up yesterday or for some reason, you know, I'm going to say that, you know, we get any move back up towards 128 and you're going to have a whole bunch of sellers stepping in. So I'm just going to write down one. Oh, geez, 128 is pretty far away. Probably like this previous hourly support, 127.10, I guess. You know, you can't draw fibs from here because you don't know if this is the low or not. This might end up being the low, not this. So I can't draw a fib from where we're currently at. But yeah, I mean, 127.10 might be some resistance. Again, it's not great resistance, so I'm not even going to put an asterisk. Dollar Swiss, 91 cents, 92 cents. Ooh, look at that. Crazy. I'm taking the, well, you know what? I'm going to keep the bullish designation on the dollar Canadian. I'm sorry. I should have wrote that when we were dealing with it. I still think it's bullish. And I think, oh, look at this 200-day moving average will probably offer a lot of support down here too. So again, I'm in the camp of I want to buy the dollar Canadian on a dip. I'm just trying to figure out how far we're going to dip here. US dollar, Norwegian krona. If you guys didn't see, I put in a pattern in play as we're, you know, right here. I am still very bullish the dollar Norway. I got long the last couple of days. My cost average is at 891.50 or somewhere right around here. So I like it. Nice intersection of these two trend lines. You see this? That was an overshoot. That was an overshoot. This might end up being an overshoot too. Trend line here, right? All sorts of support down here. So I'm going to write down 870. 878. But I'm still very bullish the US dollar, Norwegian krona. But it's come off a lot like, you know, crude has rallied. So I don't know if this is going to be the low. I mean, maybe. So maybe this this horizontal resistance right here will end up being some resistance intraday, somewhere right around here, which will be, it's called 895 for today. It's not great, but dollar MEX, I'm bullish. I bought some. This is a bull flag. Support 822, which is the 38% retracement. I know. I think we wrote 8. Oops, shoot. I'm sorry. 2022. What am I thinking? 2022. I think we wrote down 2025 yesterday, right? Yeah. 2022 is the 38% retracement. Resistance right now is at 2046. We break above that. It is gone. Okay. Dollar yen. What a big bounce from support. Big bounce from support there. Which you have to be really careful with this, because I know a lot of people have been getting short the dollar yen. So just be really careful. We drew this triangle yesterday, right? And if you think about this, just let's delete this really quick, okay? Because let's go. You guys can, if you guys didn't see it, that's from yesterday's daily analysis, right? Triangle forming. A near-term triangle consolidation looks to be forming inside the channel, blah, blah, blah. Okay. Now, think about this intraday for people that aren't seeing it the way that we see it. Crap, I got just stuck with a false breakdown, right? So now the risk there is that, you know, we get a little bit of a squeeze, maybe back towards 110. So I'm going to write down 109.40. That range is tightening, which makes it a little bit more frustrating. Dollar index. This is very irritating to me. My pattern play got invalidated overnight. So irritating, right? That's probably going to hold 92.90. I don't trade the dollar index per se. I just trade dollars, but you know, I put in a pattern. When I see a pattern in play, I'll put it in. That's just irritating that it actually took my pattern in play out. Resistance will be back up here at 93.20. I'm gonna have to keep that in range for now. S&P. Support in the SPOOs will be, well, I mean, today. I mean, I'll write down 4,400, 4,450. It's obviously still bullish. 4,500, 4,495, 4,515. So, I mean, it's just 4,500, 4,515, just in case we push through those highs. Okay. Okay, we'll start with Bitcoin. So Bitcoin, A, B, C, D complete, right? So that is 50,500. Support is, you know, we'll continue to write this 42.5, but you know what? I'm gonna actually write this down as support, because this is, if we break below this level here, then we start creating lower lows, right? So sorry, I was just looking around at stocks and what's happening really quick. Okay. 43.7. Oops. $50,500, right? Yeah. Still bullish. Obviously, got to be very careful with it, just because of the ABCD completion, right? So you got to be careful with, if you're long crypto, you got to be cognizant of that. So, but I don't think it's bearish. It's just probably you don't want to be a buyer right now. 24, 23. Can't believe that's still holding. I mean, if I was long silver, and I know I could throw it out there like, yeah, I'm long physical silver, blah, blah, blah. But no, if I was long like silver as a trade, I'd be pretty nervous that we haven't been able to scale back above 24. Again, if I was trading silver, I'd be very nervous that we haven't been able to recover that. Especially with the dollar as weak as it's been. Like, how is that not, how have we not broken? Gold's broken higher. I think gold's struggling too, but gold's struggling at this descending trend line. Shoot. But how has silver not broken higher? So anyway, gold resistance right now is going to be 1832. Actually, you know what? Forget that. It's a 618 retracement at 1825. I am going to take us off bearish though on gold. I'm going to keep it in range now, since we got back above like this broken trend line support, and I might have had it on range yesterday. I can't remember, but anyway, support should be right through here, like all this hourly support somewhere through here, right? So I'm just going to write down 1770. There we go. All right, so your bias chart is finished. I don't know if Stelios and Steve are here, but we'll see.
Are they?
Hey, how's it going, Steve? I wasn't sure if Stelios, I haven't seen Stelios all day today, so he's probably out at the beach, I'm assuming.
Yeah, I'm assuming the same thing as you do.
Yeah, he's definitely been a beach bum the last week, which is good. I would be too if I was in Greece and near a beach. I'd go sit on a beach.
It seems I'm a weirdo.
you are a weirdo. I cannot figure out for the life of me, what are you doing here? I should be shutting off the webinar right now and saying, hey guys, I'll see you at the daily roundup. But no, I'm going to pass it over to you. And you, Mr. Weirdo, all right, have fun. Don't spend too much time with everybody. Go enjoy yourself, Steve.
Yeah, mate. Unfortunately today, quite a lot of stuff to do having to do with work other than the webinars. But yeah, I'll be more than happy to give a fast, outlook of what's happening in the other asset classes, mostly, obviously. And then I'll definitely take some time to go to the beach.
Awesome. All right. Enjoy. And hey, guys, I'll see you on the daily roundup and in the chat room. So thanks, everybody.
Okay, mate. See you later. Okay, so let's see what we have for today. Let me open the question box and the chat, and there we go. Let's start. Okay, so I know we've covered FX mostly. Just a follow-up, because I joined the webinar late. I was working on some other stuff. So just some follow-up on 2-3 different instruments in FX before we jump to the rest of the assets. So this is the Aussie. You remember we talked yesterday about the potential of a morning star formation being built here. The way we closed the day, definitely solidified that type of a reversal pattern. We got a very, very strong morning star formation if we're talking about the last 3 candlesticks. Now, if we're talking about a single candlestick. Yesterday's one, it was also bullish engulfing. So, quite a big reversal in the Aussie, and of course, it's not the only one. Worth noting, in my opinion, is also the USD CAD. Very powerful evening star formation here, right? Let's mark it. There you go. Very powerful evening star formation. Yesterday's candlestick was, a really formidable one. And here's the USD knock as well, which is worth noting for two reasons. First of all, because it also posted an evening star formation yesterday, but second of all, because it's currently testing this trend line support from this ascending channel trend line, from this ascending channel's uptrend. We had this rebound unfolding within this ascending channel, and we're currently testing the trend line support. And a break below it, technically speaking, opens the door for a continuation lower. So, needless to say that we will have formed a double top once we break through 870, right? So below 870, we also trigger a double top formation. This one specifically, let me mark it. There is resistance. There is support. There is the width of the formation, and there is the respective downside target pointing below 830. So yeah, USD NOK also starts getting really interesting. That I mentioned it last week again, that I'm going to be looking to start some short US dollar positions with NOK being my first candidate. So I'm really getting close to testing the waters, and I'm not talking about the waters outside of my room. I mean about the FX waters, with a break below this and a daily close below it. So it might even happen today, right? Let's see how this works out. We did speak about the DXY and the potential reversal there. From what I heard from Grega, he's also of the opinion that this rebound in the dollar is probably at its end. Now, I don't want to jump the gun. I'll be a little bit more conservative, but that my thesis always remained that the rebound in the dollar is corrective in nature, right? Now, of course, a corrective move can prove to be prolonged or complex, or very simple and short-lived, right? So even if you're looking for a corrective move, that doesn't mean that you short the first little rebound, or the opposite. If we're talking about an uptrend, you buy the first little dip, but it is what it is. Now, having to do with the rest of the assets, you remember I mentioned specifically yesterday about gold, that for me the key area remains the area between 1802 and 1811. We mentioned these two specific levels, this area of, let's say, $9 more or less. For me, that's the key area, and as you clearly see, we have not broken above it yet. So, based on how I've drawn things on this chart, gold hasn't broken out yet. Also, silver hasn't broken out yet from the $24 area we mentioned yesterday. We said that somebody can even potentially call this a double bottom if you ignore the spike low we had on that Sunday a couple of weeks ago. But we still need a break above 24 for silver to open up the upside. So, both gold and silver currently testing resistance. So, you like them to the short side, risk reward is very attractive for you to be short here, right? Now, alternatively, as I said, we break above 1811 and above 24 in gold and silver respectively. In my opinion, being short is going to be a pretty bad idea that might hurt your wallet. Now, we also mentioned yesterday the great importance of the crude oil rebound, not only because of the magnitude of the move we had yesterday, which was still unfolding when we had this webinar. It was still early on the day, as it is still early on the day today. but also the importance of the area from which we rebounded, right? So the fact that we closed almost at the highs of the day, and the fact that we are resuming the move higher today, in my opinion, both are very bullish signals. So keep that in mind. And they increase the possibility that crude oil has indeed bottomed. Now, in a very equivalent manner, the rebound in palladium, which seems very similar, with the one in crude, is also resuming higher today. But as I've mentioned here, in my opinion, critical key level, a pivot area for palladium remains 2500. So I would want to see a move above 2500 before I actually turn more bullish, because currently I remain neutral. I think it can go either way between crude and palladium. As I reiterated, I'm reiterating, as I said yesterday, I would remain more optimistic crude with what I have in hand at the moment. Now, what else? There was something else. Yeah, I wanted us to have a look at some of the crosses in FX, specifically Euro Aussie, Euro Kiwi, Pound Aussie, Pound Kiwi. And then I'm going to go to questions. So here is Euro Aussie, quite a big reversal lower yesterday, and quite a nice continuation so far today. I'm wondering if this could have been a false breakout. And I'm saying that because as long as stocks remain very well bid, it's really rather tough for these type of pairs to perform well for a long period of time, because the characteristics of the Aussie and Kiwi are totally different than the ones of the Euro and cable, with the aforementioned being more sensitive to risk, and Euro Pound and Euro and Pound being a lot less sensitive to risk assets, right? Here is Euro Q, which never actually broke higher, right? Still remaining within the channel. And you'll see that the situation is similar in the case of the Pound Aussie and the Pound Kiwi, meaning that the Pound Aussie has performed better. Here it is, having actually broken out from its channel quite some time ago, and now failing from the confluence of resistances at 191.35, where we have the 50% fib of that move lower and this horizontal support resistance area. So yes, I mean, we still have some distance, especially in the case of the Pound Aussie, before we can even attempt to call this a reversal, but I'm paying attention to it nevertheless. One of the reasons being that Pound Kiwi, is looking totally different. Never broke out, never even came close to breaking out from this, in my opinion, corrective channel, and currently being much closer to the channel trend line support than to resistance. So anyhow, these are the things that have, needless to say, by the way, I mentioned it earlier yesterday, unsurprisingly, we had new all-time highs both in the Aussie and the Kiwi, right? Sorry, what am I talking about? The S&P and the Nasdaq. We had all-time highs in both cases, and technically speaking, in the case of the Nasdaq, we have now also triggered this breakout from this rectangle, which targets, as we mentioned yesterday, 15,700, with 15,600 also being an upside resistance for the reason I mentioned yesterday. It was the 100% extension from this triangle's height, right? So yeah, Nasdaq seems to have more upside. S&P, why not? We remain within this ascending wedge. Why not more upside? Yeah, I know there are divergences, so on and so forth. We've talked about that multiple times. These might take a long time before they actually end up playing out, and for the time being, we have to focus on what we have in hand, which is indices that are really bulletproof, right? No matter what they throw at them, news, developments that, theoretically speaking, are not positive for the economy, a path forward for monetary policy, theoretically being tighter than the market might have expected a few weeks ago. Although I've told you my, I have many objections to that theory, but it doesn't matter if I have objections or not. It's what the market subscribes to, not what I think is the case. So, having mentioned all that, indices just don't care, right? So keep that in mind. Chad is asking for EuroCAD. Yeah, sure. I mean, let me show you. Here is EuroCAD, and EuroCAD got rejected once again from the confluence of resistances over there, right? 200 daily moving average, this triangle trend line resistance, both rejected EuroCAD for now. So EuroCAD remains under pressure, but within a larger triangle, right? So keep that in mind. And if you want, we can also throw in the mix EuroNOK. EuroNOK also seems to have been rebounding in what looks like some kind of an ascending channel as well. So yeah, those are turning lower as well. The only exception being, because I was looking at them yesterday, Euro MXN, right? Euro MXN still within this larger descending channel, but within the channel, we've had this break higher from this descending wedge, right? So keep that in mind. The MXN, seems to be mixing things up in comparison to the rest. Now, let's have a look at questions. Moderna. Let's see. So here's Moderna. Now the question is, what's happening here? My opinion, likely, not certainly, but likely, some kind of a bearish consolidation. I would expect at least one more leg lower from Moderna, at least, at the very least. So yeah, I won't be turning bullish. Not yet. I think it's extremely dangerous, if you ask me. FSLR. Yeah, we talked about this several days ago, and in my opinion, nothing has changed. There is both a bullish and a bearish case scenario here, but I would definitely not be buying this as long as we trade within the context of the blue formation. You see this ascending triangle, right? Because I don't like this move higher and the characteristics it's displaying so far. It might easily be just part of a larger, more complex corrective move, and we might easily see another turn lower from there. So I know that somebody that will focus on the red formation will feel very comfortable buying this because it can be interpreted as a breakout, back test, and continuation higher, and it might be the case, right? But I can't ignore, I can't not see the blue formation as well. So I'm a little bit torn here, and that would keep me sidelined until we have more clarity on what's happening here. Low, is that a ticker? Yeah, it actually is a ticker, and we seem to have broken out in this one. You can see why, right? We haven't had a look at it for some time. We seem to have broken out. Yeah, keep looking higher. 224 is the next upside target. NVAX. I have this with this one, the same type of problem I have with FSLR, meaning somebody could see this as a breakout after a corrected move lower, But where is the momentum you expect to see once you get a breakout after a corrective move? It isn't there. And the RSI testifies to that. You notice how, despite producing higher highs since we found that low over there, RSI has failed to produce an overbought level. So, yeah, I don't know, mate. Although theoretically speaking, I should have already turned bullish, given the levels we've broken above. The structure of the move higher just isn't persuading me that we're done. And that's the problem here. That's the problem here. So I would remain sidelined here also for the exact same reasons I would in FSLR, and wait longer before either this proves that it has broken out and starts picking up in momentum, or starts moving lower again, in which case I will start looking for a bigger corrective pattern and formation here. Laura actually asked about NVAX. Okay, and Amira for FSLR. So yeah, it wasn't even the same person, but irrespective of that, the two of them look very, very similar in my eyes. They have the same problem. They don't persuade me that we've resumed the upside, and that's all that matters. MARA. Okay, what is this? MARA. Another one. Same symptoms. I don't know if the disease is the same, but the symptoms seem very similar, right? Yes, we are moving higher, but I'm not convinced. This might need more. So yeah, I'm not convinced here either. Notice also the RSI divergence and the inability, also in this case of the RSI, to break higher in overbought territory. Also notice, the overlapping choppy nature of the move higher in comparison to the nature of this move lower, right? So I think we might still be in some kind of a corrective form from that high to who knows where to. Oh, it's a Marathon Digital Holdings. Yeah, okay, got it. And last but not least, we have Bitcoin. I can tell you in advance that despite the somewhat negative day today, nothing has really changed in Bitcoin, meaning, as I've said, would I be chasing Bitcoin higher almost on top of the 61.8% fib? The answer is absolutely not. If I was bullish, would I be looking to buy Bitcoin given the prior move? Certainly, why not? But I would only be interested from a risk reward perspective if and when we see a move back towards 42.5, right? Doesn't mean that we're going to revert back to that level. We might not. But from a risk reward perspective, I would not be chasing it up here after the move we've had from 28,500, more or less, whatever that low was, all the way up to almost 51,000 that the 61.8 is. So I would not be chasing this up here. I would only be interested if we backtest the breakout area at 42.5. Now, many times if you want to stick to your principles, right, there is a chance, and it will happen to you eventually and again over time, there is a chance that you are going to lose some trades, right? Undoubtedly. But I'd rather lose trades, which anyhow happens every single day, right? How many trades we lose in technical opportunities we don't even notice, or in tickets that we haven't even had in our charts, or we haven't checked during the past, let's say, couple of days, and something has happened. Millions and millions of opportunities we lose in any case, right? I don't care if I lose a few more opportunities. I care to be comfortable with the trades I end up taking. right? Because these are the ones that end up registering in the P&L of my account and not the rest, right? So for that reason, I only care about the parameters and the criteria for the trades I do enter, and not for the ones I could potentially enter and I don't end up doing so, right? And I don't, psychologically speaking, don't end up thinking about it and regretting about trades you didn't take for a good reason, right? Because, for example, a risk reward was not appealing or something else was off. Anyhow, that's it for today. I'll see you again tomorrow. I wish you a wonderful rest of the day. Bye bye.